Welcome friends, you're watching Tax Dosti videos, and as I promised that we'll be talking about tax problems of non-residents. This is a case of tribunal that we have already discussed in our previous video with reference to section 111, and in this video we discussed that just owning property in Pakistan, ownership by a non-resident does not make him a tax evader, and that's a good video. You can watch it. Here today we will be talking about section 82, which deals with the resident who is a resident individual and who is not a resident individual, and the pain point that has arisen in tax year 2023, which started on 1st of July 2022 and will end on tax year 30th of June 2023, is that if a non-resident person living in any part of the world is not a resident of that jurisdiction or any other jurisdiction, then he will automatically become a resident individual of Pakistan, and he will have to first of all declare all his foreign source income and his Pakistan source income, and he will have to pay taxes on both, which will be a huge amount. In addition, according to the recent section 7E, he will have to pay tax on the Pakistan owned assets, as well as capital value tax at the rate of 1% on his foreign assets. So you can imagine that this person will be paying tax at the rate of more than 50% of his total world income if he accidentally becomes a resident individual. That means that if he spends too much time in different countries and does not become a resident of any country, he will become a resident of Pakistan, and he will have to pay tax on his income as well as assets, Pakistan source and foreign source. So this case can be a good defense, and we will be discussing in different parts who is a resident, who is non-resident. So this is a very good case to base our position if you become accidentally resident person, and this video is for non-resident persons. This case is Raja M. Rahil versus Commissioner of Inland Revenue. The citation is in the Taxation magazine in volume 122 of tax year 2020. On page number 10, this case is given. So section 82 tells us who is a resident individual, who is not a resident individual. In this case, the facts of the case are a French national who was also a Pakistani and who owned property in Pakistan was given a notice to file his return under section 1144 and his wealth statement under 1161 of the income tax ordinance, and the whole case revolved around the fact that he is non-resident and his income, just owning his assets does not make him pay tax. But now the situation, this was in tax year 2020, now the situation has changed, since first the tax authority will see in which country you are tax resident, and they will require from you, if you are in US, if you are in UAE, Canada, Europe, they will ask for a tax residence certificate. And since you know that Tax Dosti is in UAE for a few months, so we are telling people how to become resident in UAE, tax resident, so that you may not have this problem in Pakistan. So if you are not a resident, you can't prove that I was, for example, 183 days in another country, or I was a tax resident in UAE for because I spent 90 days or more. So you will automatically become a resident, and then this filing of income tax return, wealth statement will become compulsory for you. And the purpose of these videos is to clearly discuss what it's meant to be a resident, non-resident according to Canadian tax law, American tax law, and other tax jurisdictions. So this is a very good case for non-residents to understand their tax liability in Pakistan. The authorized representatives proceeded by first arguing that the Section 82 of Income Tax Ordinance lays down the circumstances under which one person can be held to be resident of the state for a tax year, and that condition was in tax year 2020 that a person would be physically present in Pakistan for 183 days or more. But now in section 82 another amendment has been made which is applicable for tax year 2023, which says that if you are a non-resident in all other tax jurisdictions, you will automatically become a resident individual in Pakistan. So if we fast forward this case, we can add that new rule, and according to that you will become a resident of Pakistan. But here they were saying that this person is not a resident, and they also brought into action the avoidance of double taxation and prevention of fiscal evasion, the double taxation treaty between France and Pakistan. So they also mentioned that, and since I told you that this section is of unexplained income, that is section 111, where the property purchased by this person was made taxable on the grounds that this person is a resident person. So the authorized representative on behalf of the taxpayer are arguing that he has not been in Pakistan for 183 days and he is not a resident. Further, and with reference to capital value tax which has been imposed under section 8 of Finance Act 2022, this paragraph is very important. I'll read it. Learned authorized representative also submitted another issue that needs careful consideration, is that of the application of section clause 2 of subsection 2 of section 1 of the Income Tax Ordinance 2001. The section states that the authority of the letter of the law laid out in Income Tax Ordinance 2001 extends to the whole of Pakistan. Now, the CVT capital value tax has been imposed on the foreign assets of resident Pakistanis. So this paragraph is important, and in subsequent videos we will see that how the tribunal answered all these questions that are being raised by the authorized representative, that whether a person who is outside the jurisdiction of Pakistan, how can he be or she can be taxed. The issue that arises here is one of jurisdiction. Due to the fact that the person does not live in Pakistan, the application of unexplained income does not arise under section 111 of Income Tax Ordinance 2001. Furthermore, as the individual in question is not a resident of Pakistan, the issue of unexplained income under section 111 is also ill-founded, meaning that this section says that if a person cannot explain his sources of income, he will be taxed on that portion which he cannot explain. But this section is only limited to resident person. So with reference to this new law, where if you are in America and earning all your income there, if you do not become or show a tax residence certificate of American jurisdiction, then automatically you will become a non-resident, and once you become a resident of Pakistani tax jurisdiction, and if you become a resident individual, then the tax people may send you a 111 notice saying that you have not explained the income that you have earned in America. Now, if you were a non-resident and showed them this tax jurisdiction certificate, then you will be set free. Otherwise, they will proceed and tax all your American income that you earned there as Pakistani income. So to avoid all this confusion, we are making these videos so that you can see, and we are using a case where all these facts have been discussed with reference to being a resident, non-resident, and unexplained. And on top of that, we are adding that in this paragraph you can see that the issue of capital value tax has to be challenged on the grounds that a resident person having foreign assets cannot be taxed by the Income Tax Ordinance 2001. So the question of residence has become very important for every Pakistani citizen living abroad, and some other points were also raised. We will be discussing them all in subsequent videos, including resident of a contracting state, meaning that how can you prove that you are a resident of another tax jurisdiction or resident of a contracting state with reference to double treaty of avoidance of double taxation. So all these things are important, and these are highlighted, including national and mutual agreements and double taxation treaty. Hopefully, I will conclude here. So far, we've seen that those Pakistani citizens who are not aware that the government has made a change in the tax residence rules of Income Tax Ordinance 2001, and that change is that if a person is not a tax resident in any other country, he will automatically become a resident individual in Pakistan and will have to pay tax on his foreign income, Pakistan source income, his foreign assets as well as Pakistan assets, which I think will for the year become more than 50, taxation will be more than 50%, and that can be avoided by streamlining your tax affairs during tax year 2023, which will end on 30th June 2023. You were watching Tax Dosti videos ji. In the next video, we'll discuss the highlights of this case with reference to residence and avoidance of double taxation and capital value tax and this section 7E tax on deemed income where holding of assets has been made taxable. And so far all the courts including Sindh High Court have given a clean sheet to the government, and the final decision will be made within a year or two by the Supreme Court. But for the time being, it's better to streamline your tax affairs for 2023, since all these litigations are relating to tax year 2022 for which filing has been completed. Thank you very much. See you in part 2 of this video, taxation for non-residents, removing their headaches. Tax Dosti is in UAE for the next few months. I'll be sharing the number. So if you have any questions, you can call on the UAE number or on the WhatsApp number, Pakistan WhatsApp number. Thank you. Take care.